first panel, so we're going to have an interview with Mike Rutherford, a Twitter personality also has Dirty Bubble Media, right? So he's the online sleuth who discusses, the risk of staking platforms such as Celsius, which ultimately led to collapse. They are interviewing Dirty Bubble Media, our very own Blockhead columnist, John Reeder. So John Reeder is the founder of Della Federation. He's also the tech director of FX trading at Nomura. Right. I'll leave John to do the share more about his background. But thank you all again for coming so bright and early in the morning.
Can you, Mike, you can hear me? We're good?
Yeah.
Okay. It's interesting interviewing a laptop. Good morning, good evening. Alrighty, so I guess everybody knows a bit about the Celsius story, but do you want to start with how you got interested in this and sort of how this whole saga for you began?
Yeah, so about a year ago, started getting interested in kind of just learning about crypto, kind of just in general, how all this stuff was working. And I came across all of these centralized finance platforms that were claiming to offer these very, very high interest rates relative to kind of the rest of the world and the rest of the markets outside of crypto. And the question I was asking myself was, how is this possible? Right? Like, what are these guys doing that these banks and hedge funds and everybody else hasn't figured out? What's the secret sauce? And so I just sort of started looking into it, and Celsius kind of became my focus because of what I had discovered pretty early on about the person who founded it, named Alex Mashinsky, who turned out to be kind of an interesting character who had kind of misstated his entire history. And once I realized that he was kind of a liar, I figured, maybe there's something wrong with this company, and I started looking into it a little more closely.
Okay, that's an interesting description of an origin story. Fair enough. I mean, so you're not a crypto person historically, right? So how did you find the process of starting to look into things? Because it's sort of famously an ecosystem without lots of easy end user tools.
Yeah, so I mean, I started off with it more from a perspective of having some familiarity with a little bit of familiarity with finance in general, and also kind of an odd fascination with the history of Ponzi scams and fraud. And so I really didn't start from looking at it from a perspective of the crypto. I started looking at it from a perspective of kind of the people who were involved in this company and looking into their backgrounds. And then subsequently, I started teaching myself how to use basic things like Etherscan and other tools to kind of look at how the money was flowing and what they were doing with it, and found some interesting things as a result of that.
Okay, so when did you decide to start being public about this?
I mean, really, it started right away, because I just had this stupid Twitter account, and I was just having fun. I wasn't like I was trying to make it into this big thing and go after people or anything, but I was just kind of, whenever I'd find something interesting, I would share it. And it kind of just grew to the point where I decided I should start doing it, systematically, and trying to communicate in a way that might actually have some impact, because people started listening. So it really was organic. It wasn't like I planned to spend my days doing this, but it just sort of happened.
Well, so I guess that's a positive story about crypto Twitter producing sort of more information for the world and not just noise. That's actually kind of entertaining. Well, so it was really the engagement from people that got you to dig in further. Okay.
Yeah, it was interesting, and I sort of my background's more in science than anything, and just the process of discovering new information and being like the first person to know something is kind of addictive. So when I got into this, and I was like, I'm the only person in the world who knows this about this company outside of people inside of it. It was kind of addictive almost.
Okay, and then, so I guess we know at some point in the story they started attacking whatever cyber attack type stuff occurring. So what was how does it feel sort of, it got bigger and bigger and then it got more difficult, or what's the process there?
In terms of?
Well, so I guess originally Celsius wasn't coming after you, and then famously you were hacked in a bunch of ways we can come to. How did this kind of?
Yeah, I can't say I know for sure who did it.
Fair enough. Okay.
There were Celsius was the main thing I've spent a lot of time on, but there's a number of other projects I've looked into that probably didn't appreciate the attention so much. So I never really decided or known for sure who did that, but it is interesting that when I finally got back control of my Twitter account about a month ago now, all of the tweets from like April on were deleted, which were many of the ones were kind of the big ones that really were shedding a lot of light on Celsius. And there's sort of my next project is looking at a lot of the transfers that happened sort of in that period between them freezing deposits or freezing withdrawals and declaring bankruptcy. And I almost wonder, there was some interesting stuff going on, and I wonder if they needed to shut me up so that those things could happen without somebody keeping a close eye on it. But yeah, I mean, I really wasn't targeted beyond, people calling me, saying I was working for the big banks and, or I was working for Sam Bankman-Fried or the Bitcoin maxis or all these weird conspiracy theories that things would come out, occasionally get threatened and things. But yeah, until I got hacked, it really wasn't that I wasn't really expecting it, to be honest. It was kind of a surprise.
I mean, what were you expecting?
I guess I wasn't expecting anything. They hadn't really engaged with me, and really, I mean, I didn't get that much attention until just a few weeks before the whole thing collapsed. So it kind of all happened at once, almost,
Okay, so you said they didn't really engage with you, so that Celsius never responded to any of the stuff?
Celsius responded, well, Alex Mashinsky responded to one of my tweets towards the end, which was one showing that essentially one of their strategies was borrowing from one DeFi platform to pay back the debt on another DeFi platform. Okay. And essentially all I did was point out that seemed a little bit odd, that this company had to be engaging in these kind of extremely complex transactions with a lot of risk involved in order to essentially, move money from one protocol to another. That was the first time he ever responded, and he said something along the lines of, well, we borrow sometimes when it's cheap to borrow and we pay it back when it's not cheap. It was obviously a lie. I mean, if you look at actually what they were doing, but that was the only time he ever responded to me on Twitter. After that, I never heard from him again. They blocked me very early on. They blocked me back in right when I first started talking about the company. They blocked me very quickly. That was usually their strategy.
Huh. Okay, so I guess that sort of starts to touch on the two sort of main subjects I wanted to dig into. So one of them is what's happened since the freeze and the bankruptcy, and sort of how that interacts with the procedures that are going on there. And the second one, and you can do these in any order you want, is you're not an actual professional journalist, right? So it seems odd that this would be so fruitful as a way of investigating things. It doesn't really feel right. I mean, how should we do this? How can people make things better going forward? Whichever direction you want to take it.
So, in terms of what they've been doing since they froze withdrawals, so they froze withdrawals on June 12th, famously, not allowing any of their customers to exit after making many pronouncements publicly that they were totally solvent and everything was fine, which has come back to bite them subsequently in their bankruptcy filings. And then for about a month, and then July 13th, they filed bankruptcy. In that month period, obviously no customers could withdraw. However, there's billions of dollars in transfers that happen after that time, most of which go to FTX. And I haven't totally figured out exactly what they were doing. I think a lot of it was them actually selling some of their customers' assets in order to pay off the debts they had on various DeFi protocols. But that's for another day. But yes, they were doing some things that are very questionable, and I think that in the near future, there will be a lot more attention paid to those transfers and transactions. But we have a lot more to learn.
Well, okay. So
in terms of the,
sorry.
Go ahead.
I was just going to say.
No, go ahead.
In terms of the activity that you saw, you didn't have to recalibrate all your stuff, right? They just continued to do what they were doing before the filing.
They're using the same addresses. They're using the same connections. It's the same business. I mean, it kind of makes sense. I mean, they had a serious problem because they had borrowed vast amounts of real dollars against these various crypto assets. And, they faced margin calls in these platforms like the Maker protocol. If Bitcoin prices had continued to fall, they would have lost all of their collateral. So they had to pay those debts off. The question is where they got those dollars from that I think it's a little bit interesting.
It's an interesting combination of sort of transparency and not. So that you're almost arguing that the behavior is understandable. It just wasn't disclosed, but it was in public. That's a weird...
Exactly.
Huh.
That's what's fascinating about, I mean, I think it's a problem across the whole crypto system is this idea that there is this transparency, right? I mean, every transaction is publicly viewable, but at the same time, if you don't have somebody telling you what those transactions means, most people don't understand any of this.
Okay.
You know, I mean, even like I would say I pride myself in trying to explain these things as simply as possible, and even a lot of the people who invested their life savings in Celsius they still don't seem to understand kind of the basics of how these types of transactions work. So it's a limiting factor. This theory of transparency is kind of meaningless when you're faced with people's lack of knowledge.
I mean, you managed to figure it out, so it's not, I guess the...
No, it's not hard. It's not hard. I don't think it's hard at all. I think it's very simple. I'm not really sure why... And to get to your other question that you were asking about, why was it so fruitful for me to do this? Why? The fact is simply that no one else was doing it, right? I mean, anybody could have figured this out. Like you could have spent a few hours, and somebody who really knew what they were doing could have gotten there a lot faster than I did. It's just nobody. I don't know if nobody cared or nobody thought it was worth looking into. But yeah, I mean, the only reason I got there first is that nobody else was looking.
Well, I guess it's an open question whether anybody had a real incentive to look for it. I mean, you did this, for fun, basically, so.
I did this for fun, basically, yeah.
Okay. I mean, what...
I mean, theoretically, though, if you think about it, I mean, Celsius was, the amount of assets they were controlling, there is an argument that the crash in Bitcoin around that time was related to their insolvency, and they may have been dumping assets at that time. There's a plausible case for that. So if someone who was, financially interested and motivated in the crypto markets should have been looking into this, and maybe people were. I honestly can't tell you, what was happening behind the scenes, but nobody publicly was doing this.
Well, I mean, we can go back to that one. I mean, you saw transfers to and from exchanges, but there's no evidence of sort of converting one thing into another beyond, I don't know, so what fraction of their sort of this collapse beginning AUM did you see flowing around among protocols?
It's really hard to say, just because knowing how much they actually had is the hard part, right? Like, You have the numbers that they were claiming, like they claimed to have, how many ever 100,000 Ether, but like in practice, some of that was was the payouts that they were supposed to be making, the interest payments they're supposed to be making to their customers. That's factored in there, and we know that based on the current filings that they were never making enough money to actually have paid out those returns. So whatever number, it's sort of like Bernie Madoff, right? Like people say, Bernie Madoff had $60 billion under management. If you actually subtract out all the fake payments, how much money was actually there, right? That complicates things. If you don't have their books, it makes it very difficult to know how much actual total assets they had.
Oh, okay, yeah, because you can see what's on chain, but you have no idea. Well,
I can see what's on chain, and I can only attribute, some of that's loaned out to different protocols and different individual accounts, and wash through exchanges. So you can never get a full picture from the blockchain ever, unless it's a very simple question. It's very difficult to figure out a full picture of what this company was doing.
Okay, so I guess
we're talking hundreds of addresses.
I mean, that connects a little bit to the bankruptcy process, because famously they eventually filed for bankruptcy. When you got to see, that's the first time you got to see inside, right? Before that, it was just on chain. What was that like? How surprising was that? What did you learn that you didn't know from reading those first couple of days of filings?
Well, the big thing that nobody knew about, even because I was fortunate over time to have developed a couple of sources that were inside the company, so I knew some things that weren't public, but the fact that they had lost hundreds of millions of dollars to a still unnamed party in a loan transaction back in 2021, that was never disclosed to anyone. I believe the Financial Times identified that company as being called Equities First, which is this kind of interesting firm that is global, that was never able to pay back this collateral that they had Celsius had used to borrow against. Nobody knew about that. That was totally hidden. Other than that, the fact that they admitted to not having ever earned enough returns to pay the yields that they were claiming to pay, that's a pretty big admission to make. And something that I could never prove, although I definitely suggested that was likely the case given, their claims versus the reality of what I was finding. But
okay, so
and the thing to remember is, just because they filed for bankruptcy, they actually just had to appoint an examiner to for the Chapter 11 bankruptcy, because according to the trustee and to the judge, the company has not been transparent in any sense. In fact, they don't. The court does not actually even know where these crypto assets are held. They don't know these addresses. I publish the addresses on Twitter, but the court actually doesn't know where these assets are held. That's never been put in the filings. If you actually read the Celsius filings, they're incredibly vague about, like, they don't name names. They don't tell you where these assets are held. They don't tell who their counterparties are in these loans. There's a lot we don't know still.
Okay, so I guess on the hacks, that stuff should be somewhat visible on chain, and you'd have thought somebody would have had an interest to look into that, or are those things that you haven't been able to go back and spot? Or I'm just trying to figure out where this went wrong.
Well, the losses to this unnamed party, Likely Equities First, that was just a transfer that Celsius had made, I believe borrowing against Bitcoin to get dollars.
Okay.
So it's kind of like the Tether loan, where they give a bunch of assets to Tether and then they get margin called. It's sort of like that, except Equities First just said, hey, we lost your collateral.
Okay, so
it's interesting to know.
Sorry, you gloss over a lot of stuff there. So the Tether loan, maybe you want to go through a little bit of what that is?
Well, so for people that don't know, part of the reason I got interested in Celsius is that, Tether has been very closely involved in Celsius from a very early point. Tether was one of their largest shareholders and also was a major lender to Celsius. So essentially what Celsius had done was sent a large amount of Bitcoin, approximately $1 billion worth, to Tether, and then borrowed tethers against that, and then did whatever they did with those dollars. They never paid back that loan, and then when the price of Bitcoin crashed, right around the same time as Celsius froze withdrawals, Tether margin called them and claimed some $860 million worth of Bitcoin.
Okay, so and this loan is something that you found, or I remember there was a Mashinsky video about this.
This has been publicly disclosed. It's publicly disclosed in the bankruptcy filings. The thing that's funny about that is almost certainly that was not a legitimate transfer, and that the money will probably be taken back from Tether at some point, unless they can follow some very rigorous standards about the claim that they've made against those assets. That's regardless.
Sorry, when you say not legitimate transfer, I mean what? Alleging something's $1 billion. That's it. Yeah.
In a bankruptcy. So the long and short of it is that Bitcoin actually, because El Salvador, it's kind of funny, because of El Salvador of all things, because they declared it legal tender, it has a slightly different treatment in a Chapter 11 bankruptcy. This gets kind of technical. Long and short of it is, Tether has to meet a very, very specific set of requirements in order to prove that they have a claim on those assets that they've taken. It's almost certain, given their lack of paperwork and how shoddily things were run, that Tether does not have will not meet those requirements, and likely will have to give back some of that collateral. They'll be treated as an unsecured creditor rather than a secured creditor.
Okay, so it's the idea that you can treat collateral that way without whatever contracts or something. I mean, I'm not a lawyer, right? But
yeah, exactly. So that's going to be that's a separate issue. I mean, there's a lot going on that we don't know about, and that I think that we're going to find out more and more each day as time goes on. We're going to find out just how sleazy some of the stuff that was going on was behind the scenes.
Well, okay, so I mean that transfer sounds like something that's interesting, at least. You said you haven't noticed changes in behavior before and after their filings. I mean, that's how much of the stuff that you're observing is sort of. There are filings. Are people getting approval for things? Does it look like these systems are sort of the court system and the DeFi system are tethered to each other in any way? No pun intended.
Well, at this point, Celsius has pulled all of their assets out of these DeFi protocols. They're essentially all the assets I've found are just sitting in a few addresses, and that's almost all of the assets that they have left. So those assets are just sitting now. They haven't been, since they filed bankruptcy, there have been no transfers. All the transfers that happened were between the period of, them freezing withdrawals and filing for bankruptcy, which was about a month.
Okay.
And a lot of people, a lot of people are wondering why it took them so long to file for bankruptcy, because even as early as when they had first froze withdrawals, there were reports in like Bloomberg and other big news outlets saying that they had been advised to file for bankruptcy by their attorneys, even very early on in that process. So it's interesting that they chose not to for so long, and I think that was because they had to make some transfers to some folks.
So that's what, there was an increase in activity and then a halt in activity or something.
Yes.
Okay, all right. That's an interesting observation, at least. Well, okay. So I mean, this is a lot of sort of technical stuff about what's happened here. I mean, you're not really a participant. What do you do in crypto other than this kind of investigative stuff, or this is the extent of your involvement?
This is the extent of it. I mean, you know, if I had learned about it maybe 4 years ago, maybe I would have considered investing. But by the time I had learned about all of this stuff, it seems like the scammers had taken over, you know, to a very large extent.
Okay.
I mean, I know there are legitimate operators in the field, but for every one of them, there are 10 scammers out there doing some various fraud. I mean, look how big Celsius was, right? They were, well, I think, the largest CeFi protocol out there, and clearly were, you know, breaking the law in every sense, and in addition to just being totally unethical and incompetent. And you have people like that, you know, basically dominating the entire market landscape. I mean, how do you make an investment in something like that when you got these guys running around?
No, I mean,
You know.
that's an opinion, I suppose. Fair enough. I mean, I guess, so what can be done, if anything, to make this better? Because it sounds like someone finding evidence of weird behavior sort of for fun, somewhat sarcastically, is not the best way to build any kind of system. Is this a fatal flaw? Is this something we can work around? Do you think journalism needs better incentives, or, you know, we can maybe spend some time trying to be constructive here? I mean, what can make stuff better?
I definitely think, I mean, journalism needs, yeah, I mean, the incentives are bad. And I think part of the issue, too, even relatively early on, before a lot of people were paying attention to what I was doing, I was talking to a number of journalists who were positioned to have people listen to them. The problem was that they were never willing to publish based on evidence from blockchain, oddly enough, because it's so new that they didn't understand that it's literally like an immutable record of everything, right? Like they didn't understand just how significant that evidence was. So I think that was part of the issue, is just like the disconnect between these traditional journalists who are excellent journalists, just like not understanding the technology and not being able to apply it in their journalism. I think that limited them to a very large extent.
I mean, okay, that's an interesting observation. So that's actually a way in which we are early, in that some proper business journalist, whatever it is, just isn't familiar with 100% reliable evidence. Okay.
Yeah, exactly.
They're used to a confession, photos, whatever, a wiretap. Interesting. Okay. Do you feel like there's enough sort of interest and motivation to do investigative stuff, and it's just a lack of understanding of what qualifies as evidence, or, you know, where do we go from here?
I mean, I don't know. Realistically, I mean, look at what happens in traditional finance every day, right? I mean, there's all sorts of things going on that could be found out by motivated journalists and individuals. The incentives just aren't there for them, right? They prefer to wait until the story is made, right? Like once Celsius collapses, then everybody wants to jump on the bandwagon and go, oh, let's write a story about it, because now it has. I mean, you have to think about their incentive is to sell and to get people to read articles. If nobody's heard of a company, they're not going to want to do an investigation into it.
Well, I mean, okay, I'll push back a little bit on that one. I mean, most of the most famous business journalists do investigative work about questionable stuff. We can talk about if those are a majority of the people who are on television most of the time. But, you know, the Enron journalist stuff was extremely well, whatever. Bethany McLean got awards, or whatever the rest of it, famously.
Sure.
It's not.
But I mean, that's Enron, right? Like Enron was a major corporation. Like Celsius was known within crypto, but like even within crypto, like a lot of people who were very involved in it didn't really care about it, because they kind of regarded it as like an idiot's like bank, right? It was like for the people that didn't really understand crypto.
Okay.
Right. So like even the crypto journalists weren't all that interested in kind of really delving into what was going on in that company. And I don't know, maybe to some extent it's just being afraid of being sued or something too. I honestly don't know, but I think there's a few different things going on.
Okay, so this might have sort of slipped in a crack where it wasn't the pure DeFi that some people like. Okay, that's an interesting observation. I mean, I don't know how much you've read while doing your investigations on sort of regulatory stuff, but do these feel like problems that either clearer or more enforced or whatever different or something regulations might change? Was this just a case of people paying no attention? Is there any interaction there? I mean, if they're following the Chapter 11 bankruptcy rules, there's clearly some level of respect for the court, the system.
Well, they are now, yeah. I mean, definitely the SEC and other regulatory agencies have dropped the ball here. Like, they could have. I mean, a great example with Celsius is this token, their Cell token, which was kind of the foundation and a really key part of how their whole business operated. I mean, you can make a very clear argument that that is a security based on its function within their ecosystem. And, you know, things like that were never clearly defined one way or the other, that allows people like this Alex Mashinsky to take advantage of that lack of clarity and offer these things to people that, you know, probably shouldn't have access to them. Right? I mean, they should be accredited investors, or in the case of the U.S., it was, or whatever. But the thing is that I think, honestly, I think the regulators, again, it's sort of like the journalists. They got scared of innovation. You know, like they didn't want to like take the step of trying to learn how these things worked, because a lot of this stuff isn't innovative. It's the products that Celsius were offering, that they're basically just, you know, they're almost very similar to a bank or a pawn shop maybe or something, but like. They're regulatory, like from a regulatory perspective, they're not like that innovative, actually.
Oh, okay, so
Like
it sounds like that
ledger.
that sort of slipped in a crack as well, similar to the journalism coveragey kind of problem.
I think that's a big part of it. I think that's been the advantage for a lot of these folks, is that, you know, they're basically arbitraging that lack of understanding that's available in the traditional, you know, media and regulatory agencies to kind of make a quick buck and, you know, get out before they get caught. But, you know, we'll see how that works out for them.
Okay, so I guess that's a problem you fix by making clear stuff isn't allowed and then policing it, right? Doing one or the other is not enough.
Exactly. Yeah.
Okay.
Yeah, and that would be important. But I mean, you know, the other thing to consider though is that, and this is going to be a problem for crypto, is that fraud is inevitable even in a highly regulated system, right? Like, again, Bernie Madoff is a great example of that. Like, he was offering products that, like, I mean, he was following the rules, and he was still, you know, running a massive Ponzi scam. So, like, these things will happen even with regulation. So that will not solve the problem. And there will always be scams like this. The problem is going to be that the regulators are going to use this as an excuse to just absolutely clamp down on everything. As far as I imagine, but
well, okay, I mean,
I guess we'll find out.
To the extent that something wrong happened here, because, you know, there's going to be some investigation, whatever. We'll learn more on that one. Generally speaking, the way at least the U.S. system, they filed in the U.S., a U.S. company, deals with these things is you catch people afterwards and then you prosecute them. So that's kind of the system working as long as that happens. Is that a fair?
Yeah, I mean, that is, exactly. That's the problem, is if you're an investor, you have to do your own research and you have to be responsible enough to, you know,
so
check other people's work.
Now, there may be some sort of mismatch between the protection people expect and the protection people are maybe entitled to, is not the right word, but going to experience.
Right.
Okay, interesting. I mean, have you ever been contacted by any of the sort of authorities type figures? You mentioned to me once that you thought the SEC read your blog, so.
I'd rather not.
Okay, no, fair enough. That's fine. That's totally fair. Okay, so I mean, the experience of, I know you were hacked on your Twitter and your Substack, right? So those are both big platforms used in the space. What was it like trying to recover from that? What can people learn how to do things better or not, or, you know?
Well, Twitter, so my Substack was attacked using fraudulent copyright violation claims. Essentially what they did was this other website copied my articles verbatim and then made a claim stating that they had published those articles before I had, which was obviously false. That wasn't that hard to fix. Yeah, that was literally all they did. There's actually an article about that. Matt Binder wrote an article about that. Anyway, yeah, it was literally the most stupid thing, but it took like 2 weeks to get it figured out. It was ridiculous.
Okay.
Twitter took months, and the only reason at the end of the day I recovered it was that I had friends who were verified Twitter users who had connections inside the company who got me help and got me actually a real person to talk to, because Twitter, if you don't have those kind of connections, they don't care. Like, they'll just, too bad, man. You've lost access, game over. And that's happened to many people. So I was fortunate to have, kind of built some connections along the way, but that was the only way I got it back. And
Okay.
I mean, and it'll tell you, it pretty much, I mean, during that 2-month period, I lost most traffic to my blog. I lost a lot of connections. You know, it's amazing how much damage it does. And that's, I guess, one thing I would say is try not to be reliant on one platform if you're trying to do anything like this, because if you lose that platform, you're kind of screwed.
Now that's interesting, because if Twitter engagement was not, I mean, we discussed earlier how people may not be so interested in negative news, and yet no longer being able to pump that out dropped the number of people reading things. That suggests there's maybe more interest in negative news than there is in publicly acknowledging you're interested in negative news, if that makes sense?
Perhaps, yeah. Perhaps.
Did you get messages from people privately that wouldn't publicly engage with you but were interested to talk? I know I've had that experience.
Oh, yeah.
Okay.
I've had lots of people. I mean, I've had a number of, a couple of former employees, people who had briefly interacted with the company or with some individuals involved with the company. I got lots of interesting stuff. The problem was that, and this kind of gets back to the question of ethics and journalism. I have the advantage of being anonymous or pseudonymous. I could have probably published a lot more things that I never published. A lot of kind of rumor-based information, a lot of which actually turned out to be true. But I chose not to because I wanted to make sure that whatever I was putting out, I was certain was true. Because if it came back that I was lying, then I figured it would, damage my reputation. In practice, unfortunately, online, people have very short memories. And so I've noticed a number of folks who don't have quite those standards, who make up shit all the time and seem to get away with it pretty often. So,
Okay, that's an interesting interaction. So because you're not a traditional journalist with a publication name or whatever, you sort of have a different way of maintaining a reputation that changes the thought process for what was and isn't publishable. Right? If the New York Times wants a correction, people kind of accept that. Whereas I guess you're alluding to some Twitter accounts that even if they say their thing was wrong, nobody kind of forgets about it.
Exactly. Yeah.
Okay, that's interesting. I mean, so have you felt sort of constrained to only publishing things that are kind of on-chain evidence? Have you done any stuff that's based on, quote, attributed, whatever reporting stuff was sent to you? I don't remember.
Oh yeah, I mean, if I could back it up with, there are a number of articles I've written largely about other things. I mean, some of my early Celsius stuff was based purely on their own website, on web archive versions of various things, other data, Crunchbase, etc. Legal filings, other public, but I always relied on publicly available data that anyone could check. So that way, it's like, here you go. Here's the evidence. You don't believe me? That's fine. You go look for yourself. And I figured, if anybody had the interest and wanted to do it, they could check my work and find that it was true. And that was kind of my idea. But
I guess that is the ultimate caveat emptor crypto attitude. So fair enough. Okay.
Yeah.
All right. I mean, have you noticed a change in sort of the overall approach towards skeptics is maybe not the right word, because you're sort of an investigative journalist reporting things people don't want to hear, since the Celsius explosion? Because this was probably the most high profile, someone calling out a service and the service imminently going offline. Do you feel like
the reception's gotten better for things? Have you found engagement is more positive since then? Have we learned anything at all?
Unfortunately, it makes it a little less fun. Actually, I kind of like being on the on the losing side of the argument. Back when everything was going well for them, I kind of like being the bad guy. Now everybody's like, "Oh, you did such a good thing. You're so helpful." It's like, well, come on, that's no fun.
It's okay. It's no longer combat, so it's not quite.
I'm not the underdog anymore. It's like I was right. So, well, shit. Now what? But.
Okay, no, fair enough. I guess plenty of people do stuff because they enjoy the the back and forth, such as it is. And is it? All right, fair enough. You're not gonna. Are you moving on to other stuff? Or are you just gonna keep going on this one? Are you trying to find
a few other things? Yeah.
Okay. I guess what? So you'll go wherever the most entertaining pushback and obvious problems to expose are.
Yeah, and at this point, I'm fortunate because I've built enough of a reputation that I have people sending me things that they've pretty much done all the research for themselves and say, here you go, here's all the research I've done. And all I have to do is check and see if it's true, and then I can write an article about it. It makes it much easier now. So I've got a couple things like that.
Okay, so I mean that's sort of understandable as a way for someone who managed to get a substantial reputation in the space to go, what can people in the space do to make this better? Because if we're going to rely on someone figuring out problems that imminently explode, I mean, to some extent that interplay is luck, right? That's not going to generate a lot of good reporting quickly, right? What can we do to make this better?
I don't know, man. I
Okay.
mean,
No problem.
you're fighting against massive operations that spend a lot of money to build a narrative, and it's very hard to fight that. Like I said, I made very little progress until right before everything collapsed. Like, people really were not paying attention until the problems started showing publicly. You really can't expect that much from people. I mean, people believe what they want to believe, and until you confront them with just absolutely, and even honestly, there's still a lot of people out there who believe that nothing was wrong with this company and that it was all a vast conspiracy to destroy it that happened. It was never like there's still people out there who argue that hey, I was working for FTX or something so they could short this cell token. It's crazy. There's like these conspiracy theories that are just absolutely insane, and yet there's a lot of folks out there who still believe that. So, I wouldn't be too optimistic about your ability to communicate these things to people.
Well, okay, I mean, I would say, and I'll open this up for questions in a second, the idea that those conspiracy theories are insane, like, while I agree with you, because that stuff wouldn't be on chain, it's the same problem you had with reporting things earlier. So it's difficult to do that when nobody has a real reputation and everything is sort of semi-public, semi-not. There's no allegation there, right? Clearly I don't believe that's craziness. But that puts everyone in a difficult spot.
I wish somebody was paying me to do this. That'd been great.
Yeah. No, that's not what I meant, but fair enough. Okay, so I guess we got a little more time. We can open this up for questions if anybody has. I think this is your first live interview, is that right?
Yeah.
Anybody? Anybody questions? No? Come on. Singapore's not famous for asking questions and things, but somebody must have some. No, I mean, I asked who he's going to go after next. He's looking for sort of entertaining, but not. No? Come on. Okay, fair enough. Well, maybe somebody can chime in with more questions. I don't really know. I mean, so have you found anything you didn't expect reading the bankruptcy filings? I mean, I know you had some stuff about his family members trading cell tokens and whatnot. Did it turn out to be better, worse, or different than expected? Or reading the bankruptcy filings?
None of that's been disclosed yet.
Sorry?
None of that has been disclosed.
Oh.
There's nothing in the filings about founders selling. There's nothing in the filings about really any of those transactions at all.
Oh, okay.
That's what I mean. There's very little. They've given very little information. That's the thing. Like I said, the court doesn't even know where the money is yet. So, there's a lot to be revealed still.
Because I know you had I don't know if it was a spat with Alex's wife or whatever, some discussion about people selling tokens. Okay, and all of that's still to come out for filings. There's nothing. Interesting.
Yes.
Okay. I mean, do you want to go through a little bit for people the cell token saga? Because I know you had some entertaining posts about that a while ago.
Yeah. I mean, essentially the long and short of it is a big part of the reason the company went bankrupt was that they were using their customers' assets to actually buy the token in various exchanges to drive the price up. And then the founders were then selling their own tokens secretly, or at least not disclosing it publicly. It basically, the idea was that this token was supposed to serve as a store of value for the company that they would use to kind of attract new investors. And in practice, what it ended up being was this massive sink of funds that really screwed them because they ended up essentially being short Bitcoin. They ended up being short these assets that were still somewhat valuable. And then once they were unable to continue supporting that token, the price collapsed. And then they ended up losing twice. It's really the stupidest thing. I mean, that's probably the dumbest thing that they did. I mean, really, it makes no sense from a long-term perspective. It was incredibly foolish, but that's apparently what they did. And that's been borne out by the bankruptcy and by other filings that,
Oh, okay. Oh, that's interesting. So the cell token activity is we're still waiting to learn things. Or is it waiting to learn things?
We're still waiting to learn, but
okay, all right.
There's a lot of evidence to suggest that that's what they were doing. So,
I'm not.
That's it's amazing that they would do. I didn't believe. That's one thing I honestly didn't even believe that they were doing it to some extent because it was so foolish. It seems so short-sighted to me that anyone would do that. That I honestly didn't believe it for a long time, but it turns out that that's what they were doing.
Oh, so you're a skeptic of your own research. I guess that's healthy. All right, fair enough. All right, I guess, are there any questions? Come on. Nobody? Okay. Alrighty, are we okay on time? I don't know how we're doing. Are we okay on time? Okay, fair enough. Well then, so thank you. This has been very entertaining. I don't know if you have any sort of parting suggestions or comments for the community here. There's a lot to learn from your story, and people need to start to do stuff different and better. So any parting wisdom you want to give us?
Just, be honest, because you can get away with stuff for a while, but eventually it's going to come back to bite you. Look at all these guys. You end up paying for it eventually. Just be honest. Please don't make me come after you, because it just doesn't make sense. Somebody's going to get you. Eventually somebody is going to get you, and you're going to pay for it. And it seems like it's easier just to lie and to make it seem like it's a great investment when it's maybe not. But I don't know. I don't see the point of doing that. But
I guess it's fair to say if it had stayed small, you'd never have bothered to look at it. So it's sort of the curse of success in something that has a fundamental problem is that somebody's gonna. Okay, that's.
Well, and you could argue that Celsius, if it had stayed smaller and it hadn't been so big, maybe it would have actually been a viable business. It's very possible that at points they could have been earning the yield that they claimed to be earning if they hadn't tried to grow it as quickly and as recklessly as they did.
Okay.
It's possible that they wouldn't have ended up in the same. Very few people set out to create a Ponzi. That's very rarely the case. It's always an accident. Right, you make one mistake and then you figure, well, I'll cover the losses this month with the money that's coming in from the new investors, and then after that I'll make it back, and that's what always happens. Then you end up trapped. That's really what ends up happening. So, don't grow responsibly. If you're building for the future, if you're building for not for next week but for 5 years from now, don't trap yourself, because that's all that is. You're going to be a victim of your own success.
Yeah, okay. That's a very reasonable point to end on. That makes a lot of sense and is advice that's hard to argue with, I suppose. So, fair enough. Okay. Well then, thank you very much. This has been fascinating. Last chance questions? Nobody? All right. Okay. Alrighty. Thank you. I will message you later. So.
All right. Have a good one, guys.
All right. Thank you. Speak to you later. All right.